Good evening, everyone. Nice to see you all once again after a gap of some time. But I'm sure in this gap also, you all were on the rocks, right? So yes, very good evening, Shamli. Good evening, Navneet, Shraddha, Linga R, Pooja, Khushbu, everyone. Very good evening, Kuldeep, Nagaraja M, everybody. Very good evening. It's really nice to connect to you all once again. And I really feel excited whenever I have your classes scheduled. In fact, I keep that schedule very special so that I can once again connect to you all. We can have a good discussion on the subject, the intricacies, the study techniques, everything. Yes, good evening, Prerna. And Sabia Khan. Chalo. Now, since we are going to go to statutory updates, before that, I would like to ask you all, if you all have any particular questions, issues, doubts, let me first check it. After that, I'll take your questions, issues in the statutory updates. We'll be revising them. And if there are any issues, I'll also answer them. But before that, your queries, please. Yes, Ashlesha, good evening. Adil, good evening. Virali, good evening. Chalo. Now, it's turn for your queries and my attempt to resolve them. Chalo, first. Students, come on. I'm sure by now you all would have started studying, revising. So definitely you all should have come across some doubts, something not clear, something confusing. It is not necessary that you type. You can ask me, raise your hand, I'll unmute you, and then you can ask me directly. So it will save the time also of typing. Plus for me, it is easy to understand. Navneet asking, Saransh applicable for May? I believe yes, but I'll have to check. I don't know which one right now you're referring, but because we keep on updating. So I'm yet to see which Saransh you're talking about. So right now I cannot comment, but maybe if in the break, if I'm able to check, I'll definitely answer your query. Praveen asked, sir, how ICAI wants answer from my side, like I'm asking about the pattern, how to write for the GST subject. Good, beta. Now see, for this, you have to first understand what is the type of question. I'm sure this question of yours is not aimed at practical as well as neither at the MCQ. MCQ is very straightforward. You have to simply mark. You don't have to give any workings for that. As far as the question which are practical is concerned, so as far as possible in GST, in income tax, use tabular form. And also very important in practical, which I have found students missing, is they only solve. Maybe at times they give working note, but they forget to give justification. See, when it is a subject of law, taxation, which is a subject of law, you have to also give reasoning, justification of whatever working you have done. That is what is expected. Now coming to the case study type of question. In a case study type of question, it is expected, though this is not a very rigid format, but I will always prefer that you follow this, that you make out the provision of law which is applicable to that question. Now, when I'm saying make out the provision of law, that does not means you reproduce the law verbatim. That is not expected, neither in the subject of law, neither in the subject of audit, neither in the subject of tax. Why I named these three? Because these three are law-based subjects. So you are supposed to give, let us say, I will say section 15 of the CGST Act 2017, which talks about valuation, has provided as under. Subsection 1 says you should take transaction value as the taxable value if buyer and seller are not related and price is the sole consideration. However, if this is not satisfied, subsection 4 requires you to take the value as per valuation rule. Since this condition is not satisfied, hence we move to valuation rules. As per rule 33, which deals with this, the valuation provided is as under. Hence, in the given facts of the case, since the assessee is doing this, he fits in this valuation rule 33, A, B, C, D, whatever it is, and hence the final taxable value is this. So this is how, Praveen, you should write answer. And when it is a straightforward theory question, which are very rare, then I'm sure you know you have to simply straightforward write the answer. So let us say they're asking you the revised definition of business, you write business definition. When they ask you the definition of supplier, you write definition of supplier. So I think that is straightforward. Harsh has answered something. He's saying, sir, Saransh is not updated for me. Okay, so whoever has asked this, I think you have got the question. Khushbu asked me, sir, I have May 25 relevant books, so this is applicable to May 26. No, beta, not at all. And especially when it comes to GST, not at all. Because at least in income tax, the amendments majorly happens via budget only. In fact, for your May 26, even the next budget is applicable. So even for income tax, your 25 books will not be relevant. But when it comes to GST, GST keeps on getting amended via notifications, circulars. So that is why you cannot refer any book which is 6 months old, because we have to apply minimum. Minimum means the rule is you have to consider the amendments which are 6 months prior to your attempt. So if you're talking about May 26, so -6, so roughly amendments which are applicable post 1st of, if I'm not wrong, November or October, that should apply to your exams. Correct? Okay. So if there are no legal queries, let me take up with some important updates, amendments. Now, as we were discussing just now, somebody asked me, sir, what should we refer? So for the purpose of your May 26 exams, you have to study all the amendments, including amendments made by the Finance Act 25, because they become applicable for May 26 exams. And most important, you have to check for all the amendments that have become effective up to 31st of October. Because from 1st November onwards, it is then 6 months period, which is not applicable. So you will cover all the amendments up to 31st of October. So whenever you are reading any material, any book, any update, you have to make a note as to the date of being effective, because in GST specifically, many times the amendments which are proposed on a particular date gets included in the act or the rule in a particular date, but become effective on some other date. So in GST, the dates are very relevant, very important rather. So you have to read the amendment with keeping the date on which it has become effective and not the date when it was introduced. Like here it is mentioned that Finance Act 25. Now Finance Act 25 has provided for many amendments, but not necessary that all amendments are made effective, that is applicable up to 31st of October. Some may be made applicable from 1st April 26. Some may be made applicable from 1st Jan 26. So those will not apply, even though they may become effective as on the date when you're writing the paper. But for exams, those will not be considered because our rule is very clear and very specific. Yashashwini asked me, sir, can you post this PDF in the group, sir, please? Yeah, but I will not post it in the group. It will be uploaded later in the portal for your reference. In fact, this is our institute's PDF only. So very soon it will be uploaded in the portal also. So don't worry, it is our institute's PDF. So you will be getting it in due course. So I hope this is clear. Now here also, you are informed that the 2025 July edition of study material is based on the provisions of the CGST IGST Act amended by notifications up to 30th of April 25. So if you are referring to this edition of our module, which is hosted on the website, you should note that it is amended up to this date. The Amendment White's Finance Act, which have become effective till 34/25, and significant notifications are incorporated. Further, students are advised to read all amendments made by the Finance Act given at the end of the relevant chapter for May 26 examination, as all such amendments have become effective. So in this module, we have given you the amendments at the back for your information purpose, but they were not supposed to be learned. But for May exams, now they all have become effective. So now you have to refer to them. The significant circular notifications between 1525 to 3110 are given in this study update. So this study update will cover the amendment post what is given in our module, right? Are you all set to understand and ask and discuss? Right? Okay. Let us start. So we are first in the topic of charge of GST. Now in this topic, we have a section 9.5. Now we all know what 9.5 deals with. So 9.5 deals with those scenarios where the liability to pay has been shifted to the e-commerce operator, which is an app. So like you have this Zomato, Swiggy, you have this Ola Uber, you have the Urban Clap, which is I think now named as Urban Company. So you have so many apps. Now, when we talk about these apps, there would be app for multiple things. All apps are not covered. 9.5 firstly covers only notified services. So those apps through which you are ordering goods like Myntra, maybe Meesho, maybe Flipkart, they are never covered in 9.5 because 9.5 covers only supply of notified services provided through certain apps. Not certain apps means any apps, but only those specified notified services are only covered in 9.5. Now, in those notified services, who is required to pay tax? It is neither the supplier of that service under forward charge, neither the recipient. It is the e-commerce operator, that is that particular app. Now, in this regard, we had the original notification number 17/2017 and notification number 14/2017, one relating to central tax, one relating to integrated tax. And these include the list of those notified services on which tax is payable under 9.5 by the e-commerce operator. Now, in this list, there is an amendment with effect from 22nd of September 25. So very much applicable to us. What it says, service by way of local delivery, except where the person supplying such service through the e-commerce operator is liable for registration under subsection 1 of 22 of the CGST Act. So what is this? So firstly, you have to understand some concepts. 1 second. Just allow me a minute. Hmm. Virali is asking today's session about all statutory updates amendment we have and not regarding any particular chapter, but it is chapter wise only. So the compilation that ICAI BOS has done is chapter wise. So definitely we are covering amendments, but firstly, we are covering amendments applicable to May exams. Secondly, we are covering only those amendments which are relevant to those parts of the act which are applicable to your exams. Because we also have CA final where in the same chapter, some more provisions are covered, are applicable, which are not applicable here. So those are anyways not going to be discussed because that is not part of your syllabus. So we are covering only those So we are covering only those topics, amendments which are relevant to your syllabus and your exams. So we will be covering updates, but it will be chapter wise only. So it will be helpful to you for understanding so that you can incorporate the same in your respective books in that chapter. Now, what is this service which has been amended and added? So this is the notification by which this has been added. So this is the service by way of local delivery. Now, if you understand what is local delivery, so nowadays we order food using local delivery apps. So the service of providing you the delivery. So if you see, these apps are charging you some fee, some charge for delivery. See, initially maybe they may have provided it free for the promotion of their business. But over a period, they have started adding some fees. So one is you pay an amount towards the food which you're ordering. Second, you pay towards the delivery charges. Now, adding to this, now this started with food delivery apps, but now you have so many apps whereby, like I'm forgetting the name. If I want to send anything from one place to another, it is some named P, whereby I can hire that person, and on that app, I have to put the pickup address, the delivery address, and that item will be picked up from one place and will be delivered to the other place. So now they are going to deliver anything from one place to another. It is what P something. I'd also use that app one time. Yes, Porter, correct. You are right. Perfect. So another example of this is Porter app. So what this Porter app or any of these delivery apps are doing, they are providing you service. What is the service? Providing you local delivery. Now, interestingly, nowhere in the law till date, the word local delivery is explained, but generally it would mean delivery within your city limits and not going to other city. That only would be local delivery. Here, another condition is put that here this particular service tax will be paid by the e-commerce operator, that is that app, provided the service provider, that is a supplier of this service, is not liable for registration under 22R, because if the service provider himself is liable, then obviously the service provider will register and pay tax. Otherwise, the tax will be paid by the app. Now, similar condition exists for some more services which are covered in 9.5, like restaurant, like hotel, where same condition is put that the hotel or restaurant, if they are liable to register, they will pay the tax. If not, then the app is going to pay the tax. I hope this is clear. Mark this point. This is a very important amendment and you will get this in exams. Virali is asking, sir, could you please let us know the page numbers where we need to make the amendments? See, beta Virali, please don't mind. Right now, I'm not sitting with the respective page numbers where these amendments have to be made. You can simply write these amendments at the end of the chapter. When you're reading the chapter, you will definitely get the page where these amendments are there. I was not knowing that I should be preparing for page numbers also, otherwise I would have done that. But I will request that you kindly do this on your own because I'm not having the page numbers ready. Fine. Now coming to the next topic. Anyways, for some amendments, page numbers are not required because they are straightforward additions like the previous one, even the current one. These are additions. So you have to simply add one more point in that chapter that, okay, now for this new provision is there. So that does not even require page number. Beta. Now this is the second amendment chapter. That is a chapter where you have some amendments. What are this? These are services. We all know services are provided exemption by way of notification number 12 for the central tax and notification number 9 for integrated tax. Anyways, we never studied the state act, but parallel to central, you can assume the notification numbers are same. Now, what are the amendments? So first, there are amendments in some existing provisions. First, service by way of transport of goods. What is the effective date? I'm sure you all would be knowing this year is a landmark year, especially in GST, because from 22nd of September, a huge, you can say, category of reforms were brought into place, and we are calling it as GST 2.0. But let me inform you all, GST 2.0 has just started. you will see more amendments coming up in next 2-3 months up to the date of budget. So budget, according to me, will be the conclusion of GST 2.0. But for the purpose of our exams, we are limiting up to 31st of October 25. So obviously those amendments which have become effective on 22nd of September, that is this year, obviously they are applicable to our May exams. Now, what is this? Now, this is the exemption for GTA service. Now, if you remember, the exemption entry is like this, that when we are talking about transportation of goods by road, firstly, all transport of goods by road is exempt, firstly. Then they have carved out an exception saying that two types of transportation of goods by road will be taxable. So what is taxable? Transportation by GTA, transportation by courier. Correct? So the transport of goods by road is exempt, but two cases are carved out where transport of goods will be taxable, where the transportation is done by GTA or by courier agency. Now in this, the amendment is they have added an explanation. Now you'll also get the connect of this explanation with what we just studied in the previous topic amendment. What it says, nothing contained in this entry shall apply to. It means the exemption that you are reading is not applicable to the following persons. Who are they? Local delivery services provided by ECU. See, we just read in the previous chapter. So this is connecting also. So you also need to understand things in connection. So we have just made this particular service taxable under 9(5). So it was also necessary to remove this from exemption. Actually, maybe expressly there was no need to remove it, but just to avoid any confusion, because it is not clearly given over here as to what is covered, what is not covered. So hence they have added an explanation. Explanation is always added to provide more clarity. So since over there we have said that local delivery services provided through delivery apps will be taxable under 9(5), that is by the app itself. Now to match it, they have also said that the exemption for road for transport of goods by road will not apply to the following. So this exact point is applicable to Porter app, because what Porter app is doing, it is actually transporting goods. We are sending some commodity only from one place to another in case of Porter app. So that is now what will be excluded from exemption. So it is taxable, and it is taxable as per 9(5), what we just read. Second, local delivery services provided through an e-commerce operator. Is it repetition? Local delivery services provided by an e-commerce operator. Acha, sorry. It is by and or through and. Now, what is the difference? It is interesting to note the difference. One is where the app itself is providing that service. Second, somebody is placing the order over the app. So it is like you are going to the Urban Clap app. You want someone who will do delivery of some luggage of yours from one place to another. That someone you are contacting by going through going on a particular app. It means the app is not providing service. App is only connecting you to the service provider. So both things are excluded. One, where the app itself is providing the delivery, like Porter. In case of Porter, the app itself is providing the delivery. Second, in case of Urban Clap or Urban Company, you select the service supplier through the app. So app is not providing the delivery service. App is only connecting you to the supplier of service. So both cases are excluded from exemption. Means in any case, whether app provides the delivery or app is used to connect to the service provider for providing the delivery, the exemption will not apply and it will be taxable. Next, goods transport agency means any person who provides service in relation to transport of goods by road and issues a consignment note by whatever name called, but does not includes. So now parallel amendment has been made in GTA definition also. What is that amendment? That GTA will not include e-commerce operator who is providing the service or e-commerce operator through whom the service is provided. Which service? Local delivery. So both amendments are complementary. So first is they have explained, or they have amended by way of adding the explanation saying that local delivery services are taxable, not exempt. Second, they have also clarified local delivery services are not part of GTA. It means whatever GTA rules you are studying is not applicable to local delivery service. Next, I have some queries, so let me first answer. Yes, Anil, you're right. Bacho, please don't ask the same question. I've already informed that this particular PDF will be uploaded on our portal. I will ask them if it is not yet uploaded on our BOS portal, it will be uploaded. If not uploaded, but I'm sure it should be there. Otherwise, just wait for a few days. It will be uploaded there. So you'll get this from our BOS portal, right? Next. Now, this is one of the biggest change, I believe, because this was being asked for from a long time. Many central ministers have also requested, demanded this particular exemption. What is that? So today, as on date today, if I take a personal life insurance policy for myself or my family, whatever insurance premium I'll pay for this personal life insurance policy is exempt. What is important is this policy should not be a group policy. Now, generally, when group policy comes, when a company is taking a common policy for all the employees, that is not covered. But where you are taking the policy on the individual life, like you do for yourself, your spouse, your parents, your children, your brothers, sisters, that is what is covered over here. So now onwards, personal life insurance policy premium is fully exempted. Further, for removal of doubt, it is clarified that exemption shall apply to a contract of insurance where the insured is individual or an individual and family of the said individuals. Now, why it is given? Because many times you see that we take a common policy for the family. Nowadays, there are many plans which says that in this common policy, your parents, your wife, husband, all are covered. So for that, they have clarified this, that this exemption will continue to apply either where the policy is only of the individual or it is individual and the family of that individual. But again, it will not apply where it is like employer taking policy for all the employees. That group policy are not exempt. Further, for this above purpose, family will include all individuals insured as family. So interesting point is here, they have not restricted the definition of family only to spouse, children. They have said that whoever is part of that policy. So even if parents are covered, if your spouse's parents are covered, we are okay with that. So whoever is insured as family in that policy, they will be covered and it will be eligible for exemption. Same parallel exemption has come for health insurance. Same condition. It should not be for group. It should be for individual. And again, they have clarified it can be for the individual alone or for individual and family. And again, family will mean all persons without any restriction on who can be the family members. So for personal life insurance, personal health insurance, or family life insurance, family health insurance, the entire premium is exempt. Correct? Kuldeep is saying local delivery through e-commerce is taxable. Correct, beta. Company takes group policy, it is taxable. Good. Second, Anil is saying, sir, whatever newly included in 9.5, the same is reported in exemption topic as taxable service, right? Exactly. So that is what I just mentioned, Anil. So over there, see, both are complementary amendments. In the first chapter, that is the chapter on charge, they have clarified that now this service is covered in 9.5. It means they are making the app liable to pay tax, subject to that supplier is not registered and liable for registered. Second, they have over here also clarified that in this particular exemption chapter that other than local delivery, other things are exempt. So both are complementary. Here they removed it from it is the app. Now, further, what is clarified for the purposes of the above two entries, which we have just studied, group means group of person who join together in a commonality of purpose or for engaging in common economic activity. So what can be the group? The group can be the employer-employee. The group can be even firm and its partners. I'm sure you all remember something like this in accounts. Have you read something like this in partnership chapter in accounts? Joint life policy. I don't remember which level, but maybe at foundation level, you would have studied the accounting treatment of joint life insurance policy. Again, that is what is a group insurance policy, and it is not eligible for exemption. So that is what is clarified in B point. So A point, what will come in group employer-employee. In B point, what will cover non-employer-employee groups where clearly evident relationship exists.
Recording in progress.
A bigger insurance company. So what insurance or reinsurance they are giving to me, that premium is also exempt. Health insurance business means the effecting of contract which provides for sickness benefits. So this is what is actually covered in health insurance, or medical, surgical, hospital expense benefits, whether inpatient or outpatient, travel cover, personal accident cover. So they have just clarified what all things are covered in health insurance policy. We all know these are the different expenses covered. Anil, I don't think JLP is in the Partnership Act. Yes, you studied JLP, that is Joint Life Policy, in the topic of partnership accounts, but I don't recall reading any such thing in the Partnership Act. It is in the topic where you are studying accounting treatment of partnerships. Correct, Anil? So just a small technical clarification. So it is not part of the Act. It is only part of the accounting chapter in accounting treatment. Now, next amendment you can say, or more like a clarification, not an amendment, but a clarification, is in the topic of value of supply. Now, what is clarified here? So there were doubts related to treatment of secondary or post-sale discount, which have been clarified by circular number 251, which is again dated 12th of September 2025. Now, what are these clarifications? I will request everyone to be very focused, because this, I'm sure, will be a very important point or a very important question in your exams. Sanket ji, सर कोई पार्टिसिपेंट का नाम नहीं है सर, उधर डैश है, हमें उनको रखना है या बस? Sir, generally we expect that students write their name and also the registration number, sir. I think that is the strict policy, sir.
We'll do that, sir.
Sorry?
We'll do that.
Sir, I think we should just ask the student first, and if not, we can just put him in waiting room, sir. Yes.
Yes, sir.
Okay. Yes, students. Sorry for the interruption. Now getting back to the point. Now, students, this point is very important. So now please be attentive on this particular amendment, because I believe this will be there in the exams. Now, what is the issue? Firstly, understand what is the point, because you may get a case study type of question on this. So I am a manufacturer of some FMCG product. You can take example of any FMCG product. Let us say I'm Britannia company. You are my distributor. Now I'm selling goods to you at, let us say, price of 100, and you are supposed to sell it to the different wholesalers at a particular price, and the wholesalers will further sell it to retailers. So let us say you have to sell it at 110. Correct? Now what I'm explaining, I'm taking example of the first leg. The same thing will apply between distributor wholesaler. The same thing will apply between wholesaler retailers. But just for simplicity, I'm taking only the first leg. But you have to understand that this point is applicable everywhere. Now what is this point? The point is relating to section 50 15 subsection 3. If you remember 15, it is relating to valuation. 15.2 talks about additions to transaction value, and 15.3 talks about what can be subtracted from the transaction value while determining your taxable value. In 15.3, it says you can subtract discount. So if let us say the price printed is 500, there is some special offer going on because of which 200 is given as discount under offer. Generally, when you do online shopping, this is very common. They print a price and then they say some special offer, Diwali offer, or right now they will come up with Christmas or New Year, whatever. And they say that you will get it for 300. So many times they write it like this or they strike out like this. They do different marketing gimmicks, whatever. Now, this is the first type of discount, which is covered in 15.3 clause 1, which is discount given at the time of supply. And it is recorded on the face of invoice. What is face of invoice? You show like this on the invoice itself. It means at the time of supply itself, the discount is given. There is no problem at all. Right from day one, it is deducted in all cases. There are no condition and no issues. But when you go to the other type of discount, which is given in clause 2, clause 2 deals with post supply discount. Now, let me just inform you the budget that we will be getting in 2026 1st Feb. That budget is also going to make some more changes in this clause 2. That change is proposed, but since it is not yet even provided in the law, so there is no question of discussing that right now. So I'm not going to discuss that. I'm going to discuss only that part of this change which is already made effective. Now I'm talking about this 300 rupees, which is the final selling price. So 200 discount is allowed as per 15.3.1. No questions asked, no issues, everything okay. Now let us say I have sold you the goods at 300. You can take the same example of distributor. And I have said that since you are my distributor, I am giving you a target of 1 crore. If you achieve this sales target of 1 crore in the year, then after the end of the year, when we do all our accounting and all our accounts are settled, and if I find that you have actually purchased from me 1 crore or more worth of goods, then I will give you additional discount, which is, let us say, 5%. You are more than happy because for you as a distributor, 5% is a huge amount because your quantum is huge. Like even if, let us say, if we take the example of 1 crore, 5% of 1 crore is straightforward 5 lakhs, which is straightforward your profit. Now, you're more than happy in getting this discount. So you actually take a lot of efforts, you do a lot of marketing, promotion, follow-ups with all the wholesalers, and you achieve this. That is, you actually cross the target of 1 CR, and hence the company gives this discount. Now, let us understand this from accounting perspective so that before I explain you the amendment, because this amendment has some very technical pointers asked, you have to first understand the provision and the related issue, then amendment will be clear. So let us say we are talking about the financial year 2024-25, which has already ended. And in this financial year, you achieve the turnover of 1.2 crores. So you have crossed this 1 crore limit. You have achieved the turnover of 1.2 crores in this financial year. Now, what has happened? This turnover which you have achieved is calculated. Some returns are adjusted, whatever, everything which is part and parcel is adjusted. And this is computed somewhere by September 25. And just before Diwali, as a Diwali bonus to you, I have released this 5% discount. Now, this discount has happened when? After the sale is over. So sale happened in the previous financial year. I gave you the entire discount in this financial year. So that is why this is this clause 2, which is the post sale discount. So first understand the point. Now, since I'm giving you discount later, so already this invoice is made. Invoice is showing 300 rupees, which is after the regular discount, and no questions asked for regular discount. This additional discount of 5% definitely has to be given by way of credit notes. Now comes another challenge. What is this another challenge? Now, when who am I? The supplier company. You are the recipient distributor. I'm the manufacturer. When I have to pass on this discount to you, again, I have multiple distributors across India. I may have 100 distributors. I will be doing all this calculation, everybody's turnover, whoever is eligible, I'll find out that 5% amount, and somewhere in September or October, I will start giving them credit notes and giving them that money in their bank accounts. Now, what does the law provides? Now, I will do it by raising a credit note because I've already debited your account with 300 rupees as the sale value. Now, if I have to reduce any amount, I have to raise credit note. We all understand this. Now, we all know that there is a section 34 which has put a time limit for raising the credit note. Point number one. Second, this clause of post supply, right? This clause has put multiple conditions. This is what is one of the biggest issue or one of the biggest cause of the issue. Now, in this, one of the conditions put is that where the supplier, like in this case me, the manufacturer company, is giving you this post supply discount by way of a credit note, what I will do in my GST returns, since I've issued a credit note, and if it is issued within the time limit of issuing credit notes, I will reduce it from my future month's sale bill. So to that extent, my future month's tax liability will reduce because I'm showing this credit note in my September, October returns. So automatically my September, October liability is reduced. I'm paying lesser tax. So what does this section 15.3 clause 2 condition says? That I can reduce this discount by raising a credit note. To this extent, it is fine, provided my recipient has reduced its ITC. It means you should have reduced your ITC. Now, please understand the point. So, the supplier is allowed to issue credit note to adjust this post supply discount. First condition is it should be issued within the time limit. Okay. Second is I can adjust this credit note by reducing my sale and tax only if you have reduced your ITC. Now, this point created a huge challenge. What was the huge challenge? I have hundreds of distributors. I give credit note. Whether they reduce their ITC or not, how do I know? Now, what happened? In past few years, I was having this practice that I used to settle your accounts after the end of the financial year, find out your discount, pass it on to you by way of credit note, calling it as bonus, incentive, discount, whatever. And I used to reduce it from my sale. But it is getting challenged by the GST department when they are doing my audit. Why? Because they are saying, sorry, 15.2 condition is there. What is that condition? The recipient should reduce the ITC. Now, how do I know whether the recipient has reduced the ITC or not? And if I'm not able to justify or prove, they were disallowing my credit note. So to that extent, I was at a loss because my credit note is disallowed. So I end up paying tax. I hope now you're understanding the scenario. Now, one by one, two circulars came before this present circular. First circular is 92 in the year 2019. That is very initially. What it has said that now supplier is given a choice that instead of issuing a proper GST credit note, it can simply issue a financial credit note. First circular. So why this circular has come? Because if I have to issue credit note, I have to follow the time limit. Many times the time limit may have elapsed or I may miss the timeline for some reason. So they've said that don't issue a GST credit note, issue a regular accounting or commercial credit note. Now, for me, this is very lucrative option. Why? I'm passing on you your discount, but not by raising a GST credit note. So GST department has to do nothing. I'm not reducing my tax. And since I'm not reducing my tax, You are also not required to reduce your ITC. So I'm passing on the discount to you, but in this you are not required to reduce your ITC. Why? Because I did not give you a GST credit note. So first circular was asking me to issue a financial credit. Now there was one more circular. Where is that? Okay. That is circular number 212. So it is not given over here. I'll just mention for your reference. It is again an old circular 212, again dealing with the same scenario. What it said, that if I want to take the benefit of this post-sale discount, the law requires that the supplier reduces his ITC. How do I know supplier reduce ITC? So circular 212 said, take a certificate from the supplier or from the CA-CMA of the supplier. And if the supplier or the supplier CA-CMA has given the certificate that yes, supplier has reduced ITC, that is satisfaction of this condition, and I can take the benefit of the credit note because it will be presumed you have reduced your ITC. But since this second circular also required me to follow up with all the suppliers, ask them to give certificate. Even if they give certificate, when I produce the certificate to the department, they again challenge the validity of the certificate. Because of all this, I always prefer this circular, which it says, don't raise a GST credit note. You pass on the discount by raising an accounting credit note. So this practice got established in the industry in all levels. Now, what happened? Everything is going smooth. I'm giving you a non-GST credit note. So I'm passing on the discount. Neither I am reducing my tax liability because it is a non-GST credit note, neither you are reversing your ITC. Now comes the challenge. What is the challenge? When I have given you this discount, you are calling it as discount or bonus or incentive, whatever you want to call it. What you have done in your books, whenever I give you this credit note, you are passing an entry on the P&L credit side, calling it as incentive, bonus, discount, whatever. Now, many times businessmen use fancy words. So while I'm passing on this discount to you, I will not say discount because discount appears very look covered. So I will use the word, a fancy word, incentive, premium, bonus, something like this. So you also record that amount of discount. So let us say in this year, I gave you a credit note of 7.5 lakhs to pass on the benefit. You showed it on the P&L credit side, which is the correct accounting entry. Now from here, the issue starts. What is the issue? Which is now clarified by this present circular. So none of these old circulars are relevant to you, but they are given to understand how this issue has cropped up. Now, the issue which we are going to discuss is being clarified by this present circular. And please be very clear with this. This is going to be an important point for exams. Now, when you started passing this entry, a new issue that came up was that when GST department was doing your audit under the GST law under section 35, sorry, not 35, 65, they, I don't know on what logic, they said that since you are showing this as a separate income on your credit side, it means you have made a new supply. And since you have made a new supply, you have to pay GST. And this issue blown up to a very big extent across India. In every audit, this issue was raised and huge show cause notices, demand notices were being created by the GST department. And we all consultants were fighting, saying that, boss, there is no additional sale or supply made by this distributor. It is simply the manufacturer giving the discount. But somehow they did not agree to this. They are saying because you have shown a separate item on the P&L credit side, it is a new supply made by you. So now the notice is received by you. You are the distributor. saying that you should pay GST on this. Now, this issue is resolved by this circular, which says that this amount is not a consideration received by you for any supply. There is no supply. Hence, you don't have to pay GST. So, what is the first issue? Whether this post sale discount given by me to you is treated as a new supply, is treated as a consideration received by you for any new supply. In other words, are you required to pay tax on that? So the circular analyzing the definition of consideration, etc., etc., has said that these discounts are simply given for competitive pricing and push sales. Hence, it is clarified that such discounts cannot be included in the consideration because there is no special supply made by you to anyone. No, Anil. So now they are saying that this post supply discount received by the distributor or maybe further by the wholesaler, retailer, whoever, because everybody will be receiving that because there is scheme at all levels, is not treated as any new sale. In short, there is no GST applicable on that discount or on that incentive or on that bonus. Yes, Kuldeep, you can say that, but don't call it as exempt because see, Kuldeep, if you call this as exempt, you are creating a new problem. What is that new problem? Then in ITC chapter, you have to apply section 17 bracket 2 read with rule 4243 and you have to do reversal of common ITC. So don't call it as exempt. It is not a supply. Once it is not a supply, there is no question of it being taxable exempt, no question of ITC reversal. Ashlesha, very good question. Sir, is there any evidence required to prove this? No evidence. See, you generally have all these things written in your contract with your manufacturer. Plus, when the manufacturer is passing on this discount to you, the manufacturer is giving credit note, plus the manufacturer is giving computation because see, as a businessman, you are also keen on getting this discount. So you and the manufacturer have lot of communication relating to how much will be the discount, etc., etc. That itself is the evidence, beta. So there is no other evidence required, correct? Now, interestingly, in this same circular, they have added one point. See, this is where I many times feel that though the circulars are intended to clarify, many times they clarify but complicate. So they clarify one thing, but they bring up another issue and complicate it. Now, what is this other issue? So first part of it says such discounts cannot be called as a consideration for any supply, etc., etc. So no GST. It is not a supply, so don't call it as exempt anything. It is no supply. However, where the manufacturer has some agreement with end customer. Now, the second part of the same circular says that if the manufacturer is passing on the discount to the distributor by because the manufacturer is having a direct agreement with the end customer and the manufacturer has contracted with the end customer to give a special discount to that end customer, and in order to pass on this special discount to the end customer, the manufacturer is giving a credit note to the dealer so that the dealer can further pass on this discounted rate to the end customer. In that particular case, they are saying that this post sale discount should be included in the overall consideration and it will become taxable. So there are two parts of clarification, which again, I believe the second part was not required. They have unnecessarily created a confusion by adding this. Rather, they have created a new litigation point, but fine. So whenever a supplier is passing on discount, post sale discount, pass through the financial credit note as per that old circular, you have to check whether the supplier, in my example, the manufacturer, is passing on to the distributor. If it is the manufacturer passing on to the distributor, that's it. Manufacturer has no connection. Just one. Okay. So what you have to check in your question, that if the manufacturer is passing on discount to the distributor for achieving the target, which is many times called as year-end discount, which is many times called as a turnover discount, then it is not a supply. But if in the question it is given that the manufacturer had to give the discount to the end customer, I'll give you a practical example of this, though this example I'm purposefully creating. I haven't seen any such thing happening in real life. But since the circular has given this to make you understand, I'm giving you this example. Always this is only what is happening, but fine. So let us say this end customer is a big company. Let us say it is which company should I name? Because the company names which are coming to my mind are all no. Chalo, I'll give an example. Let us say our ISRO, who is the end customer, wants 500 Tata cars for its employees who are employed in ISRO. Now you all know the general rule is cars or any vehicles are sold through the dealers. Now ISRO is such a big, huge entity. In fact, it is a government entity that it can directly contact the Tata company, the Tata manufacturer. In fact, it will directly call up the chairperson of Tata and say that, boss, I want 500 Tata cars for our employees. But the policy is Tata will say, sir, thank you for your order, but we have a company policy that whatever is sold will be sold compulsorily through dealers. We as manufacturer cannot sell in the direct market, because that is practically, this is the reality, that all our goods will be sold through our dealers only. Now in this particular case, the challenge or the question will be that ISRO will say, sir, fine, that is all about your policy, I have nothing to do. But we want 20% discount on these vehicles because we are placing this order, and we will be placing this order every month. So this is a per month order, not one time order. Tata is even more happy. So what Tata does, normally it is passing on some discount to the dealer, which is the dealer's margin. Let us say it is only passing on 10% discount to the dealer. That much only is the dealer's margin. And the dealer is selling at the final sale price to the end consumer. But ISRO itself wants a 20% discount. So what manufacturer will do? It will first send all the vehicles, because dealer is also selling to others, at the regular 10% discount. And whatever vehicles the dealer has sold to the ISRO, for that, the manufacturer will give additional 20% discount. The same post-sale discount, additional discount, what we are talking about. Now, in this scenario, this second part of the circular says where the manufacturer has some direct connection with the end customer, and the manufacturer has promised the end customer to supply the goods at a special discounted price, and to give this discount to the end customer, the manufacturer has to first give this discount to the dealer, and the dealer will then finally give this discount to the end customer, as in my example which I have just given you. Such post-sale discount, that is this additional 20% discount, which will again come in the books of dealer like this only, a separate credit note, many times a financial credit note, which the dealer will record as a separate incentive, that will be part of supply. So it means the dealer will have to consider the discount value as part of supply. With supply, it is considered as supply of the original goods only. So it is to be treated as part of the value of the original goods. It means the dealer, after receiving this 20% additional discount, will add it to his sale price, and on that amount he will also pay GST. I hope this part of the circular is clear to everyone. Anil is asking, sir, manufacturer directly given discount to recipient not considered as best supply, but when manufacturer give discount to delivery agent and the delivery agent supplies to recipient, then the value of supply increases. You are right, Beda. So this is what I'm trying to explain. So where the manufacturer has direct connect with the end user, like in my case, Tata company has direct connect with the ISRO, and to provide the end consumer, that is ISRO in my example, the discounted price, it is first giving the discount to the dealer and the dealer is giving that discount to ISRO. This supply or post supply discount given by Tata to dealer will also be added in the sale price. Fine, beta. I hope this is clear to everyone. Sadia, you have raised the very proper question. Ki how this discount affects GST liability. Technically, it should not. But that's why I said, circulars are meant to make things easier and simpler, but at times they complicate it, like in this example. Yes, Navneet, you're right, beta. Adil says, so distributor not included in value of supply, but included in end consumer. Kiss. Adil, we are only talking about distributor because distributor is the one who's going to pay GST when selling the goods to the. So, Adil, I'm not understanding what exactly you mean to say, but it is the point that distributor or dealer in my example is selling the goods to ISRO at a high discounted price. So that discount which is given by manufacturer to the dealer will be added in the dealer's sales. So whatever dealer's sale is done, it is at a very high discount. So this discount will be added back in short. So it will match up and the dealer will be paying GST on the total value, including the discount which the supplier will pass on to him later. Fine. Anil says, sir, in order to claim the benefit in case of manufacturer to recipient, the special financial credit note is mandatory. Yes, beta. We are talking all this when financial notes are given. Why? Because if GST credit notes are given, this problem will not arise. Because in case of GST credit note, I am giving you the discount, you are reversing the ITC. So in the eyes of government, when you reverse ITC, but it is as good as you paying extra tax. Please understand this. So they are happy. Na? All this problem is arising only when it is a financial credit note. So you're right. Navneet, so supplier will be paying tax on this additional discount also. So when the manufacturer will give this additional discount by way of financial credit note to the dealer, dealer will pay tax on that additional credit note. Obviously, when it is paying tax, it is again raising invoice on these manufacturer. So manufacturer will get ITC. So whatever I am going to pay tax, I will be raising invoice. So my recipient, who is in this case the manufacturer, will get the ITC. Next, whether post-sale discount extended by manufacturer to dealer can be treated as consideration. So answer is clear. So wherever, now again, this is going back to the original case. So now keep this special case aside and end customer connect. Now this is the normal case. Manufacturer selling to dealer, dealer selling in the market. Now the question is, when manufacturer is giving the dealer any post-sale discount, whether this post-sale discount will be considered as a consideration. Why? Because the dealer is performing some sales promotion. Now what is this? See again, so this is how department functions. This is how the officers are interpreting the law. They are saying that whenever the manufacturer is passing on any discount to you, please check, are they passing on the discount to you because you are performing any extra sales activity? Now this is at times correct. I'll give you example. Now this is another scenario. So above scenario is over where you achieved a particular turnover and the supplier gave you discount. That is fine. Now what is the second point? Again, I'm a manufacturer. Let us say I'm Oppo company. You are the mobile shop or the mobile dealer. Now Oppo company is sending you the mobile phones. You are selling the mobile phones. Now many times to sell this mobile phone, you are carrying out some promotional activities. You are running some promotional schemes. So what you have done, you have put hoardings in multiple places, like you would see in many cities on the roadside, you'll see hoardings displaying the latest model or the features of some latest mobile handset which has been recently launched. Or maybe this dealer is playing the ad in some cable TV or such local channels so that it is able to get more sales. So many times you'll find that the dealers in a particular area do extra sales promotion activities. Now, for doing this extra sales promotion activity, the dealer incurs a cost of 25,000 every month. Dealer has already informed the manufacturer, see boss, for promoting the sales, I'm doing this extra promotion activities. Oppo says no problem, I will reimburse this. So Oppo has to pay this amount to the dealer. But what Oppo does, it is not paying amount separately. Anyways, the dealer has to pay to Oppo for whatever phones the Oppo is supplying every month. So let us say every month Oppo's billing is of 5 lakhs. And dealer has to pay this 5 lakhs to Oppo, and Oppo has to pay 25,000 to dealer towards the reimbursement of the sales promotion expenses. So what will Oppo do? It will raise a credit note again, passing on this 25,000 as a discount. So what it will do, it will say, don't pay me entire 5 lakhs, reduce this 25,000, pay me 475 only. But already the bill of this 5 lakhs is raised. So Oppo will say, no problem, I've raised the bill of 5 lakhs, I'm giving you a credit note of 25,000. Now comes the point where a post-sale discount is given by the manufacturer, that is Oppo in this example, to you. You are the dealer, the mobile shop. Whether this will be again treated as a consideration. And now what is the supply? They are saying this sales promotion activity which you have done, it is like you are providing this sales promotion activity to the manufacturer for which the manufacturer is paying. So whether, in short, the reimbursement of this 25,000 will be treated as a separate supply. Now what it says, in this context, the discount merely reduces the sale price of the goods and is not linked to any independent service. Therefore, it is clarified that post-sales discount offered by manufacturer to dealer in such cases, which I just explained, is again not treated as a supply. However, now see, this is again where all problem happens. It was simple. You should have simply said not a supply, no GSTs, over. It means even for this 25,000 credit note which you will receive, why it is for? It is for the sales promotion activity you have done, and the manufacturer is reimbursing you and it is giving you the credit note. Full stop. It is not a supply. But what they have done again, GST would be leviable in cases where the dealer undertakes specific sales promotion activities such as advertising campaign, co-branding, customization, special sales drive, exhibition arrangement, customer support, etc. Only when such services are explicitly stated in the agreement with a clearly defined consideration for such supply. Now again, what they have said, first they are saying, if you are recovering as a dealer any amount for this sales promotion, no supply, nothing. But again, an exception, if you are doing any such specific sales promotion activities and it is specially mentioned in the agreement between you and me that you will have to do this, and there is a predefined consideration given in the agreement which I will be paying to you. In such cases, the dealer provides a distinct service to the manufacturer and GST is applicable. So both things were simple, they complicated. First, it was a genuine discount. Why? Because you achieved a particular turnover. Answer is that discount is not a separate supply. So whatever amount manufacturer passes on by giving a credit note, you are showing it as a bonus incentive, not a supply. Correct? But then they added one point. If manufacturer has some connect with the end user, then it will be a supply. Complicated. Second was again a simple scenario. Many times the dealer incurs some expenses for doing some sales promotion and get it reimbursed from the manufacturer. Again, manufacturer reimburses it by giving it a credit note. Again, the credit note is not to be treated as a supply for this dealer or wholesaler. First, they said this, but then again, they complicated it by adding a condition. I hope you are understanding. Okay. So now Shambli is asking a very innocent question. She's saying, sir, I understood the amendment, whatever you said, but still I'm not able to understand how to treat the post-sale discount if given in the question. I'll tell you, Shambli. Firstly, it will not be treated, or let us say it as a sum on valuation. See, in case of a sum on valuation, post supply discount never comes, because post supply discount is done after the entire sale has happened. It is given in future by way of a credit note. So first point, clarifying you, if you're doing a valuation sum where you do add and less, in that whatever discount is given in the sum is always your discount which is given at the time of supply, which is not a post sale discount. It has to be always deducted. So if I have to give you answer to your question, the if you are doing a valuation practical question, the discount given over there is always the discount at the time of supply. It is not post sale, so it is always deductible. Now coming to this amendment. So how this amendment question will be there? It will be a case study question where it has said that in the month of April or May or June, you supplied me the mobile phones. I did this. I informed you. Now in the month of October, November, you gave me a credit note. What is to be done of the credit note? Then you will answer, depending upon what facts are given, you will say that, okay, this credit note is not a supply, so dealer has to do nothing. If it is the other facts, yes, as per this circular, since it is a specific sales promotion activity and a separate consideration is given in the contract, hence it is a supply. So the dealer will add this particular credit note in the current month's turnover. So whatever is the current month's turnover, dealer is paying tax, you will add this one more item. So to that extent your turnover increases, you have to pay more tax. So this is how the question will be, and this is how you will be answering it. Anil is saying, sir, in either of the cases, the impact of GST is nil. I don't know the reason why the department is so concerned. Let us not talk about that, but why the department is so concerned. There is an impact of GST, but you're right. What I'm understanding your point, that you're saying, sir, even if there is a GST impact, I will charge GST, manufacturer will take rate, so effect is zero. That is what is the point. But fine. Shraddha is saying, sir, at times the discount is mentioned on the product by the brand so that it reaches the end consumer. Can this be connected? Nothing, beta. That is a different thing. When the discount is written on the brand, beta, it is the discount at the time of supply. Like how when you are buying online. This I gave at the very start. My first, when I started explaining this, I said 500 minus 200. You are talking about the 200 discount, which is given by the brand and it reaches the end consumer. But that is the discount at the time of supply. So there is no question on that. That is always deductible. Kuldeep says condition may be due to, beta, there is no misuse, Kuldeep. How can there be a misuse? But still, okay. Now he's saying, sir, in case of ISRO, manufacturer is supplying a car valued 5 lakh to dealer after 10% discount regular and 20% additional. Correct. You're right. Correct. Very correct, beta. Perfect. This is what it is, Navneet. Perfect. Sir, case study questions are directly or indirectly. What do you mean by this? It is directly, na? See, two ways. Either they will ask you a question and say, what is the GST treatment? Second, in a case study, they will ask you one of the MCQ questions asking you that what will be the turnover of this month. And that month, they would have given you this post-supply credit note, which you have received from your manufacturer. So you have to decide whether to include it in the turnover or not. Perfect. Excellent. If you have understood and I am able to make it understand. Okay. So these are those additional update, students, which are not part of your module, hence taken separately. Now I go to the module where at the end of the module already updates were given with respect to the amendments of Finance Act. Only maybe, I don't know when you studied this. If you were preparing for Jan attempt, this was not applicable. But when you're preparing for May attempt, since these amendments have now been notified and they have been notified up to 31st of October, they are all applicable. Correct, beta? So now we'll be studying the amendments given at the back of your module itself. Yes, Kuldeep. So in both the cases, the second part of the answer says that if this happens, it is taxable. And wherever it is taxable in those two special cases, That credit note amount, whatever you have received as credit note, you will add it in that month's turnover. So to that extent, your turnover will increase. You will have to pay extra GST. So when we are saying it is to be treated as supply, means you will add up in your that month's total sale or supply. So your turnover will increase. Will calculate that much extra tax. Correct. Now, as you can see on the top, I have opened your original module. See, this is not part of your amendments. Amendments is a separate sheet which I just took. These are part of the original module itself. You can see the page number 2.101. So it is given at the end of the module. So when you are downloading the module, in that this amendment is given at the end. But maybe if you were studying for Jan attempt, these amendments were not applicable to you. But now for May attempt onwards, these amendments are applicable. Tanveer is saying, sir, amendments after 31st of October. Very good. Tanveer, beta, for May 26 attempt, amendments up to 31st October 25 are applicable. Amendments post 31st October 25 are not applicable for May attempt. They will be applicable for the September attempt, but that also depending upon on which date they are made effective. So for the time being, for May attempt, we are focusing on amendments up to 31st of October. Correct? Should we start? So now this part is already there in the module at the end. So see, it is clarified. The Finance Act has come into force on 29th of March. However, most of the amendments in the GST by the Finance Act have become effective only from a date to be notified. Such notification was not issued up to 30th of April. Therefore, these amendments were not applicable earlier, right? Therefore, the applicability of such amendments for May, September, Jan shall be informed by ICAI. So when this was already given in your module, it had come with this caveat that whether it is applicable or not will be informed. So now we are informing that it is applicable for May attempt, right? Because now all these amendments have been notified, and since they are notified up to 31st of October, they are all applicable to your May attempts. Fine. Now we are in the second chapter, that is chapter on the concept of supply. In this chapter, you had certain definitions. In that, one definition is of local authority. Now, there is small amendment in this definition. That is why, to make it easy for you, a comparative table has been provided here. Right. So what is the amendment first? In this part, so there is no amendment in the first part. So firstly, what is the first part? Local authority means what? The panchayat. We normally call it as Gram Panchayat. You also have a very good series, Panchayat. I'm sure you all would have seen the first three seasons. I think fourth is also out. I don't know. I'm not of late in touch with the OTT platforms, but I heard that fourth is also out or will be out. Anyway, so local authority means the panchayat. Second, the municipality, the municipal corporation. Now, when they are defining municipal corporation, they are also saying and any other authority. So it may be municipal committee, Zilla Parishad, district board, etc., or any other authority. Now, this any other authority is the point of concern. Which any other authority will be called as local authority? So this part is important. I'm reading from any side. It is same. Only one word has changed. So any other authority legally entitled to or entrusted by the government, central or state, with the control or management of a municipal or local fund. Now, if you see, when I read this, it means that you are a local authority which is created by the government and you are given the control of the fund. Which fund? Municipal or local. Now, this word fund is added after municipal just as a precaution. Why? Because in this original one, it was said municipal or local fund. But see, if I'm reading that, I'm reading it like this only, municipal fund or local fund. But again, there were doubts created, there were questions created. So to put to rest all those questions, they have just added the word fund here. So as said, this is not a major amendment. But further, they have given explanation. For the purpose of this subclause, now they have defined what will this fund mean. This is the important amendment. Local fund means a fund under the control or management of an authority of a local local self-government established for discharging civic functions in relation to a panchayat area and vested by law with the powers to levy, collect and appropriate any tax, duty, toll, cess or fee by whatever name called. Municipal fund, similar definition, means any fund under the control management of an authority of a local self-government established for discharging civic functions in relation to a metropolitan area or a municipal area and vested by law with the powers to levy, collect, appropriate any tax, toll, cess, fee by whatever name called. Now I'll tell you what it is. Now in your area, it would be this. It would be a municipal corporation or a municipality. If you are staying in some remote places, it can be Gram Panchayat. Now, in your area, if it is a panchayat, then it will be called as local fund. If it is municipality, it is called as a municipal fund. What it is? Now, your local government, which is, let us say, the municipality, the municipal corporation, is imposing on you some taxes, some duties. What is that? We call it as Gharpatti, property tax. In that, they are also charging you something for water. So they are having the power to levy, collect and appropriate what? Any tax, duty, toll, cess, fee. So many times this local body is given the power by obviously the laws created by government to levy and collect these amounts. For what purpose? For the performance of civic functions in that area. Now, what are these civic functions? Every morning, there is a ghanta gadi coming to your house, to your society for collecting the garbage. This is sent by the same municipality. This is one of the civic functions. They are providing you street lighting. Every morning, somebody is coming and cleaning the roads. Periodically, the dividers are repainted. They are cleared, cleaned. All these things are done by your local bodies as a part of the civic functions entrusted to them. And for doing that, for running that local body, which may be a municipality, municipal corporation, panchayat, they need money for making payment of wages, for arranging all the machines, for doing all these things. So this particular fund is created where the money is deposited in the fund through these taxes collections, and this civic body or this local body or municipal body is managing, regulating that fund to discharge the civic functions. If that is the case, whatever is the name of that local body, whoever is doing this, if they are having this particular format, what we just studied, they will be called as local authority. Now, why this question comes up? Because different places have different names given. See, in some places, like in Mumbai, we say BMC. In Nashik, we say NMC. In Thane, we say TMC, for example. So in places, it is already called as the municipal committee, municipal corporation, no problem. But if you go to some other places, like you find in Delhi, they called as DDA, Delhi Development Authority. Over there, the word municipal is not used. Now, when it is a DDA, Delhi Development Authority, the question arises whether Delhi Development Authority will be local authority in this. So answer is, you have to check this, whether it is a body created by government, whether it has elected representatives, whether it is having control over some fund, and it is given the power to levy, collect some tax fees to discharge the civic functions. If these conditions are satisfied, that local authority will be called as a municipal local authority, and whatever provisions are there in the law applicable to local authorities will apply. Yes, Kuldeep, you're right. In some places it is called as Nagar Palika, correct? So where the direct names are used, what is given in this list, we have no doubt. So certain direct names are given: Development Board, Regional Council, Cantonment Board. Here we don't have doubt because their names are specifically given. But where such other names are used, for them you have to apply this rule and this condition. Correct? This is the only amendment in the supply chapter. Now I go to the next topic where amendments are given. This is in the exemption topic. Now in the exemption topic, again, the amendment is relating to the same point, because in this topic also we have covered the definition of local authority. So the same point is repeated. So nothing new in this. This was already covered. The same definition, since it is appearing in this chapter also, we have covered it here, right? Now I come to the next topic, that is time of supply. But now here I just take a 10-12 minutes break. So it is 7:27. We rejoin at 7:40. Fine. So a 10-12 minutes break. Then we go to the remaining topics and cover the amendments which are part of the module itself at the end, now made effective for May 26 exams. Fine. So first I'll take two questions which were asked. One is by Divya. Sir, it would be okay for post-sale discount that if dealer draws a bill. So exactly, Divya, you're right. So now if like in those two special scenarios where the circular says that it has to be treated as a separate supply. So obviously, firstly, when we are saying it as a separate supply means GST has to be paid. I just answered someone saying that it will be added in your turnover. But at the same time, for doing that, you will be raising an invoice on the manufacturer. And that is why, if I'm not wrong, somebody also said, I think Anil or someone that, sir, anyways, it will be having no effect because the effect is nullified. Correct. Why? Because if I'm raising invoice, even though I'm paying GST, somebody else is getting the credit. So the effect is zero. So you are right. A separate invoice has to be raised by the dealer on the manufacturer because the law says that it will be treated as a discount or as a supply. Correct, beta? Understood all? Clear? Doubt? Should we proceed now? Any further questions up to now, students? Divya says clear. Linga R also says clear. Okay, so everybody's clear. There are no doubts. So now we can proceed. Okay. Now, we are in the topic of time of supply. Now, we all know what is time of supply dealing with. So, time of supply basically deals with the date or the month in which a particular supply would become taxable, right? Now, in this particular case, there is an amendment in the form of deletion of a whole provision. So if you remember time of supply provisions, there are different scenarios for time of supply, like for goods, like for service, for forward charge, for reverse charge. And in that, there is one special category which deals with time of supply in case where supply is made through voucher. That is, firstly, vouchers are issued and then the vouchers are redeemed by going and purchasing the goods or service against the voucher. Now, in that particular case, there was this section 12.4, which gave you time of supply of goods using voucher. And then there is this 13.4, which gave you time of supply of service using vouchers. Now, in both these cases, where vouchers are used to make a supply, that is, first, let us say, I want to gift you something, but I do not know exactly what you will like, whether that pattern, design, that quality of material, what I want to gift you will be liked by you or not. So what I do, I go to West Side, I pay 10,000 rupees and take a voucher from them. And then I gift you this voucher and tell, see, you go to West Side and whatever you like, whatever pattern, shape, design, material, or if you want to buy anything, you can go and buy it from there. Now, in this particular case, when I'm giving you this voucher, so first I purchase the voucher, I gave the voucher to you. Now you will go to West Side in a week or two. You will actually buy the goods and wherever required, maybe you buy the service if it is a service voucher. Now, in this particular case, there was this section 12.4 and 13.4, which provided for when GST will be applicable in case of this particular scenario of vouchers. Now, when this time of supply provisions were, and these are there already from day one, a new parallel issue arose whereby a dispute came up that is there GST on the voucher itself, means whether voucher themselves will be treated as either goods or service and whether GST would be applicable. Now, interestingly, students, voucher are neither goods nor service. They are only a medium for making payment of the consideration. It is like a prepayment. So when I go and buy the voucher, I'm not buying any goods or service. The goods and service will be purchased by you, but I'm just taking a proof of my advance payment. So if I've given 10,000 to West Side, what is the proof? So they will give me that voucher. But then issue arose as to whether this voucher itself is taxable. And then that issue rose up to a big level. So they have clarified two things. One, voucher is neither goods nor service. And hence they have also removed this time of supply provisions relating to voucher. So both are parallel amendments. So there is no other amendment in this. This chapter has only one amendment, that the time of supply provisions relating to vouchers have now been removed. Sadia, you are right. So voucher is a proof of payment. You are right, beta. So Navneet, if Saransh is updated, please take the notes from there. So somebody said at the start that Saransh is not updated. So I said, no, I'm not aware. So if it is updated beta, you can definitely take notes or simply take the notes from there. And if you find any point which is conflictive, because see, today we are covering all amendments, even the one which were there already in module and the later ones. So now when you are going there, you can, if these points are there, like for example, if this time of supply is there, you simply remove it. So it will be simple. Now use Saransh and make the amendments. Yes, Kuldeep, you're right. So Dexo coupons and all these are examples of vouchers. Correct, Kuldeep. Aditya is asking, sir, mock test is required for GST beta. For every subject, you should give mock test. So our institute has mock test. In many branches, it is being conducted properly, like in real exam conditions. So you can register over there and appear. And also these papers are later hosted on the portal. So you can even give. So let us say, if I'm not wrong, there are generally 2 mock tests. Whatever mock test, let us say you are able to give the first one. So go in the center and give the test. Give you the real exam feel, and it will make your actual exam very comfortable. So I will 100% request you all and suggest you all that you should go and give the mock test. Now coming to the amendments in the ITC chapter. Now what are the amendments relating to ITC? Now this is more of a corrective amendment. You have this section 17.5, which is dealing with block credits. In that you have clause D. What does clause D says? Where you are purchasing goods or service, and why these goods or service are purchased, because you are going to use them in construction of some immovable property. So where these goods and services are used in construction of movable property, let us say I have purchased cement, I have purchased bricks, I have purchased steel, and I have also hired people, and I have hired one supervisor engineer who will be supervising their work, and together they will be constructing one godown or warehouse for me. So I'm getting this construction done by purchasing goods and services. Now, this section 17.5D says that ITC will not be allowed on this purchase of goods service if it is leading to creation of immovable property. However, there was exception that if this immovable property is plant or machinery, credit will be allowed. Now, for this, we had 4 years of litigation. It started with the Honorable Orissa High Court in the case of Safari Retreat, and last year it was concluded by Honorable Supreme Court, in which multiple other cases were tagged together. And in that, the Honorable Supreme Court gave an interpretation to counter that interpretation and to correct the law, if I can say so. They have made this correction. So original law, the word used was plant or machinery. They have corrected it and made it plant and machinery. So this is what is the simple amendment. Second, expression 1, for the purpose of clauses C and D, the expression construction includes reconstruction, etc. This is common. New amendment is explanation 2. For the purpose of clause D, that is the above clause where that correction of plant or machinery to plant and machinery is made, it is hereby clarified that notwithstanding anything to the contrary contained in any judgment, decree, order of the court. So as I said, above correction is made because of a Supreme Court judgment where it accepted that plant or machinery is what is given in the law. So to overcome that, they have made it plant and machinery. And now that explanation is added that notwithstanding anything to the contrary contained in a judgment, decree, order of the court, tribunal, or other authority, any reference to plant or machinery will be constituted and shall always be deemed to have constituted as reference to plant and machinery. So in short, they are saying that this correction which we have made today will be assumed to be made from day 1. So from day 1, wherever plant or machinery was being read and interpreted, you will read and interpret it as plant and machinery only. So they have tried to make this amendment also retrospective. If you remember, similar other amendments were made some time back in the definition of supply. Then one more definition. So in multiple definitions, wherever they are making amendments, they are also at times making the amendment effective. Yes, in Schedule 3, in amendments in Schedule 3. So in many places where the amendments are made, they are making the amendment retrospective. This is one such example. What Navneet has asked. Time of supply in case of voucher is omitted if recipient gets voucher in the month of January. See, now when time of supply of vouchers is omitted, now what is the effect? Today I go and purchase voucher from the mall because I want to gift it to you. There is no taxability today. Though 12.4, 13.4 was providing taxability in some cases on the date of purchase of voucher. Now, since it is deleted, now the taxability will happen only finally when you go and buy the goods and services against the voucher. So when we are saying that the time of supply for voucher is deleted, it means now there will be no taxability at the time when voucher is purchased. Fine, beta, Navneet? Super. Yes, Kuldeep. So when vouchers will be redeemed, that is now, see, first step is I purchase the voucher, no taxability. I give you the voucher as gift. You go to the mall and you make purchases by encashing the voucher. That is the date when taxability happens. And then the taxability happens of the goods. Because see, voucher is nothing but the payment. What you have done is you have purchased the goods or service using the voucher as payment. See, otherwise you would have paid out of your pocket. Now you are not paying out of your pocket. You are simply giving them the voucher saying that, sir, see, payment is made. So now when you will be going to purchase the goods and service, at that time, you will be paying GST and that is on the goods and service purchased. Simple. So voucher is now out of question. Yes, Navneet, correct. Yes, Khushbu Beda, you're right. See, because see, there is a nominal charge. Why? Because the branch which is arranging the mock test, it is providing you the facility. You go there, you sit, you are using the premises. Many times in many cities, they are trying to arrange it in a neutral place. So when they are arranging somewhere out, they are also incurring cost in the form of rent. Then they are deputing some person, firstly for supervising, then later on for checking. So there is bound to be a charge, right? Fine, beta. But do avail that. It is going to be very helpful to you in exams. Now we come to the next topic, that is of invoice. Now in the topic of invoice, in section 34 bracket 2, which deals with credit note, what is the amendment? The amendment is proviso. Now firstly, what is the provision? Just for revision. So any registered person who issues credit note in relation to supply of goods, service or both shall declare the details of such credit note in the return for the month during which such credit note has been issued, but not later than 30th November of the next financial year. So we all know this. So credit note will be issued provided it is within the time limit. Time limit is after the end of this financial year. If you want to raise credit note relating to any supply in this financial year, you can do it maximum by next financial year's 30th of November. Means you have to report it in the return that you are filing up to 30th of November. So even today, if let us say there is any supply made last year and there is any credit note relating to that supply, then that credit note, if I have raised, that should be reported latest in the return which I am filing up to 30th of November. So any return filed up to this 30th of November, which is still due in 8 days, I can report the credit note relating to last year's supplies. Now, what is the amendment? Provided that, now see what happens when you report this credit note. So if I'm reporting a credit note, I am reducing that month's sales or turnover by the amount of credit note. So to that extent, my tax liability reduces. So the effect of reporting credit note is it goes to reduce my output tax liability. So provided that no reduction in output tax liability of the supplier shall be permitted. So now it is putting a condition that even though I'm showing a credit note, it will not reduce my tax liability if the input tax credit attributable to such credit note, if availed, has not been reversed by the recipient, where such recipient is a registered person. So this I was explaining to you earlier also when we were dealing with post-supply discount, that if I am giving you a credit note, or let us go back to the example of post-supply discount. I am the manufacturer, you are the dealer. I am giving you a credit note for that post-supply discount. Let us say it is a GST credit note. Now, in this particular case, the credit note, when reported by me in my GSTR1, will go to reduce my supply, correct? But pay attention. This credit note will be allowed to reduce my tax liability if you have reduced your ITC. Now, if you are a registered person, then you should reduce your ITC, and only when you reduce your ITC, I will be allowed to take the benefit of this credit note by reducing my output liability. Second, incidence of tax on such supply has been passed on to any other person in any other case. If I have passed on the incidence of tax, then again I cannot reduce my outward liability by raising the credit note. So two conditions are given. Only after satisfying both the conditions, I can reduce my tax liability. One, if this credit note is given to a registered supplier, the registered supplier should reverse the ITC. Two, if I have passed on the incidence of tax, I cannot reduce. So if tax incidence is passed, it cannot be reduced by raising a credit note until unless I also give the benefit to that person. Ashleisha, beta, which example you are asking? Incidence of tax. Okay. So see, generally this will apply in case of unregistered supplier. So for registered supplier, you give them credit note. So when you give a credit note to a registered supplier, what you are doing is effectively you are passing on the amount to them. So incidence is which is passed on is now nullified by giving a credit note, but then the condition is that the recipient should reverse the credit. Now, if you are making a B2C supply, so let us say you are a shopkeeper. I'll give you a practical example of two. You are a shopkeeper. You have sold goods at rupees 100 and paid GST on 100. Now you want to reduce this 100 by 10 rupees because you say that there is some mistake by you. It is of 90 and you have wrongly shown it as 100. Okay. But where this 100 was collected by you and the tax on 100 was also collected by you. So customer had come, you by mistake made a bill of 100, charged tax on 100, collected tax on 100, and you paid the tax to the government. After 2 months, you realize, no, it was of 90, so I should reduce the amount by raising a credit note of 10. But when you're raising this credit note of 10, why should law allow you to reduce your tax liability on this 10? Because you've already collected that tax from that person and paid. Now, if you want to reduce the tax liability, you should also pass on the benefit of this credit note to that person. But practically in case of B2 supply, it will be very difficult to identify that person. Hence, the second point, which we just discussed, incidence of tax on supply has been passed. This applies in B2C supplies. Like in case of a shop, some customer came, you charged high price mistakenly, he paid to you along with tax on that high price. Now, even if you want to reduce that price in your books because you are saying, okay, it was mistake, but are you going to pass on the benefit of that mistake to the customer? Maybe not. If not, then why should I give you the benefit of reduction in tax? Because you have already taken high tax and paid to government. If you have already charged high tax, there is no point of refunding it back to you. So in that case, I will not allow you to reduce your tax liability. Sadhya, passed on means beta. See, I just gave example. So by mistake, 90 rupees thing I sold at 100. Let us say for simplicity, tax is 10%. So I should have charged 9 rupees as tax because 90 is the price. But since I charged 100 as the price, I collected tax of 10 rupees. Means I collected 1 rupee extra tax. Now, since I have already taken this tax extra from you, now in future, after 2-3 months, I realize, oh, no, sorry, this product was only of 90. I have charged by mistake 10 extra. You are not traceable. You have gone. Now, if I have already collected that extra tax from you, now I cannot reduce that tax liability because the law is very clear. If I have collected any amount as tax, I have to pay it to the government. So passed on means I have collected that extra tax from you, which I have done in the original case. Divya Jain, sir, is there any proof that the recipient provided to supplier that ITC is reverse? Yes. So if you remember, I had already given you above in that discussion on post-sale discount that there is one more circular 2112 which was not discussed there because it was not required. That circular says that you have to take confirmation from the supplier. If the amount is small, the supplier can give confirmation himself. If the amount is large, he will have to bring the certificate from his CA or CM. So that is the proof. But let me inform you, now in returns, a new return or a new concept has been added, which is IMS. Once this IMS is made effective and is used by everyone, the this particular requirement that you should take a confirmation and get a certificate from recipient that he has reverse ITC will not be required because IMS itself will do it. Right? What is IMS and all? We'll check. We'll study. Okay. Now, before I take up this topic amendment, many people are asking questions relating to mock test. See, I repeat, mock test, students, I believe is something which is very important for your exams. Please make use of mock test. Second point, somebody saying, sir, there is charge, there is no charge. See, that is the prerogative of respective branch where it is conducted by the branch. Generally, I have seen majority of the branches charge. Why? I already gave clarification because the branches incur extra expense for conducting the mock test. They also check the paper. So they are hiring someone for doing all this. Correct? Then somebody is asking me a question. Ki, sir, when we should give the mock test, whether after one revision, two revision. See, my understanding in this is, see, I have always been a student who always take chances. Chances means I don't think much that whether I'm completely prepared, I should give this attempt or not. I always go and give the attempt on the basis of whatever I have prepared. So now I'm talking with perspective of mock test. So let us say, just for example, 1st December, you have the mock test. But now somebody will say, no, sir, but my portion is not completed. Somebody will say, sir, I have not revised. As a student, what I would have done? I would have still gone for the mock test. Why? Two reasons. Reason one, I have studied something. Let me test myself for the studies which I have done. See, you have a one day gap even for the mock test, which you will get in the exams. Whatever you study now, you will be revising during exams in that one day. Why not do a trial of that in this one day? So take this mock test as a final exam on the basis of what you have studied. So don't assess yourself by the 100 marks paper. See, this is where you make a mistake. Many times students tell me, no, sir, I will not give mock test because if I get less marks or if I fail in the mock test, I will lose my confidence. Arey bhai, why you should lose your confidence? When you yourself know that you have not studied the whole syllabus, when you yourself know that you could not revise the whole syllabus, so what is there in losing your confidence? In fact, I always take it as an opportunity. As I said, two reasons why I, as a student, will go for this mock test. One, to test myself on whatever I have studied and whatever I could revise. So how I assess myself in the first mock test, let us say I have revised 50-60% of the portion. Now, whatever topics I could not revise or could not study, in the question paper, I will strike them off. Simple. Now, after striking it off, if the paper is of 60 marks, I will assess myself on that 60 marks first. Second, mock test for me is also important because it helps me understand what I need to change in my approach when I'm doing my further preparation and revision. Because see, today when you are preparing, you are going as per your flow. Maybe that flow or that approach may not help you actually when it comes to writing the papers. When you give the first mock test, you get to know, oh, I was thinking I know this chapter. I thought that I can answer this. But no, I was confused on this. Acha, I could not recall this. So when you give the first mock test, it is a realization about whether your study techniques are matching, whether it is helping you. If not, you get to know in advance that I have to modify. So besides testing on whatever I have studied, second thing what is very important, which is actually helpful to me in mock test, is identifying whether my approaches are helping me. I hope you have got the answer, whoever had a question, right? So my first mock test is for testing myself, not what marks I'm getting. Okay, somebody's asking, sir, how to start revision? Answer is simple. Take up every subject, go to the last page. You have let us recapitulate. Best way to revise. Where you feel, no, I'm not able to recall, go to the whole portion of that chapter. Then after let us recapitulate, go to Saransh. And at the same time, keep these updates. These are already there in the module. And what is additional, I just gave you that, showed you that, which will be very soon uploaded. So don't worry. This is more than sufficient for you. And see again, please understand and appreciate, students, you are attempting for such a big exam for the first time in your life. This itself is a very big achievement. I know thousands of students who simply even fear to think of taking admission in CA. Forget about reaching inters. They don't even take admission at foundation with the fear of not matching the CA level. There are thousands. You are those limited few selected ones. Just take a percentage, how many students in a, let us say, if in an academic year, after passing 10th, there are some lakhs of students going in for further education. How many of them are coming to commerce? And from that, what percentage is coming to CA? It will be less than 1%. Please understand, taking up the challenge itself of doing CA, this itself is a commendable thing. This itself should be a pat on your back. Yes, I am at least trying to do something which is extraordinary, which is out of this world thing. See, passing CA is not at all easy. That itself requires lot of commitment. Many times people feel, sir, I should be extraordinary in studies, I should be scholar. No, I know people who are very average, who have been average throughout their academics, right from school to college, but they have cracked CA. Maybe one, two attempt, that is okay. If my English is not good, that is where I may get stuck up. If I'm not able to revise, recall things, I may get stuck up. But that is okay, students. That is what is the challenge of life. If you want to be at a big level, you will have to fight it out. You cannot be at a big level without fighting it out. Best example is our present Indian women's team. I am a big fan of cricket. My entire life, in fact, my own philosophy, psychology is connected to cricket. I have been following women's cricket for past 10 years, but let me tell you, this year, for the first time, I felt that people are knowing across India, across world, our women players. And do you think it was easy? Now, post this winning of the World Cup, if you have seen the news, there are a lot many news which are sharing the stories. And I have seen shocking stories on YouTube and all relating to so many players that there was a time when they were not even paid, they were not even provided basic facility. Forget about good hotel or anything. There was a time when the entire team only had two bats. So the only batsmen inside were using the bats, or if somebody could afford their individual bat, that's it. That was the status in last 10 years. I'm not talking about some 20, 25 years. That also in India, which is the richest country when it comes to cricketing. But they fought. Today, world knows them. Now you go and check what is the charge which Smriti Mandhana and Harpreet Kaur and your this Rodrigues, they are charging for advertisements. Suddenly, I was reading somewhere, Smriti Mandhana has made her price for all these endorsement 5 times, and she is getting why? But they fought out 5 years for that to make their mark. This is what is extraordinary. Now people know them. Now people praise them. Now people follow them. Everybody's followers on their social media handle has increased 10x, 20x, 100x in some cases. There are players who are workers in their real life. Actually, you can go and check. This is extraordinary. And this is the same level of, I will say, firstly opportunity, and then after becoming a CA, this is the same level of prestige, same level of recognition, same level of commercial advantage you get after becoming a CA. So consider yourself like the same Indian cricket women team who fought out 5 years just to create their mark. That also, strangely, ironically, in a country which is already cricket famous. In India, we say cricket is another religion. But in that same country, women's cricket was having no value. There were no sponsors, there was no money. Even BCCI, who is the richest cricket association, somehow was not having that aptitude 5 years back. In last 5 years, because of their internal policy changes, they started doing the same thing what they are doing for men's cricket. The best thing was WPL, Women's Premier League. That is from where the change started. That is from where multiple women players started getting opportunities. So more and more players started coming. That is where money started coming because franchisees came in. Please understand this journey, this example, and link it to yourself. And remember one thing, you have to go and play the match yourself. If you are fearing for mock test, how you will give the exam? And these exams are one time. Once you become a professional, any field, you'll have exam every moment. What do you think about a doctor? When he's going to do any other operation, that itself is a very big exam, a test for him. When a person is launching a satellite sitting in ISRO, every satellite, first is the developing part and then the launching part is itself a big exam. Every moment there is a big risk of failure, and over there, the impact of that failure is huge. So why to fear? If you just imagine what would if these people would have feared to fail, would India be so successful in satellite launches? Just think about that Uri attack. Had our soldiers for a minute thought, Kineni, what will happen if I get caught? Because we know what has happened in past when our Indian soldiers were caught by Pakistani soldiers. But they never thought about that failure. They just thought of one thing, that this is my job. I have to go and do it. Simple, boss. You will have to have that approach and attitude. That's it. That will make you the extraordinary. Somebody is asking, sir, how much time we should spend for GST revision? See, there is no fixed rule, beta. It is all depending upon how much you are prepared. The less you are prepared, the more time you have to spend for revision. But otherwise, I'll simply say, divide the number of days or number of hours you have up till your exam. Firstly, mathematically by the number of papers. Sorry, not papers, the number of subjects, because papers are less, but the subjects are more. So simply first do mathematics, average out. So let us say one subject gets 15 days. Now start working. When you start preparing, you will realize that, okay, in 15 days, then you will divide the chapters. Again, by simple maths, divide the number of chapters by number of days. Now for one chapter, if 1 day is being allotted or 1.5 days allotted, and while preparing, you find that no, 1.5 days less, then you know that you have to make internal reshuffling. That is how Veda study is. It is all trial and error. Nobody can give you a foolproof method which is suitable to everyone. These are general advices. You have to work out your way. So start studying, you'll get to know how much extra time I require for this. Now let us say it so happens that you require extra time for every subject and it is not sufficient to cover the whole portion. No problem. Strategy B, do 80% portion. That also is a very effective approach. Do 80% portion, see the past exam papers, 5 past exam papers, you'll get to know which subject, sorry, which chapter in the subject has more weightage. Select those 80% chapters and do them. Leave 20% chapters. I'll tell you my own strategy. See, right now, when you all are studying, you have so many coaching options, you have so many notes, you have so many saransh and simplified notes. In our time, even module was not available fully because I have studied in the era of non-internet. I qualified in 2002 attempt. 2002, maybe many of you would not even be born. In that attempt, or in that era, I should say, because I started 98, I completed 2002. Forget about internet. Even basic things were not available. Coaching classes were not available everywhere. In fact, I did not have the opportunity of attending classes. Any class I haven't attended till my entire CA course. And there were nobody providing you notes. In market also, we did not have any specialized book only for CA course. Today you have so many authors writing books only on CA course. But that was the opportunity for us to prove ourselves, work hard. So now you have so many things. So give yourself time. Take out time from your schedule. Have a proper discipline. It will work wonders. If let us say, like for example, for me, certain subjects were challenging week, it may take time. I was fortunate not to flunk an attempt, but that's okay. Even if someone flunks, it makes no difference in your life or career. Fine, students. Okay. Let me take up the amendments in the returns chapter. Now, section 38. Now, what does 38 deals with? The details of outward supplies furnished by the registered person under subsection 1 of 37(1) and of such other supplies as may be prescribed, and an auto-generated statement containing the details of input tax rate shall be made available. So what is 38 talking about? When your supplier uploads his GSTR1, which is a statement under 37(1), you, that is the registered recipient, will get an auto-generated statement. Now this was the original language. Now what has changed? They have removed the word auto-generated. So now it reads, such other supplies as may be prescribed, a statement containing the details of input tax rate shall be made available electronically to the recipient of such supplies in such form and manner within such time and subject to such conditions as may be prescribed. So what has happened? 38(1) is to be amended to omit the expression auto-generated with respect to statement of input credit in that subsection. So simply what they have done is they have removed or corrected this part whereby they have removed the word auto-generated. So it is now simply a statement. So basically they are referring to the statement 2A and 2B. Similarly, in 32 also, which read as the auto-generated statement under subsection 1 shall consist of this. Now what they are saying, the statement referred to in this above subsection, which is again 2A to B, what we are talking about, shall consist of details of inward supplies in respect of which credit may be available, details of supplies in respect of which credit cannot be availed, whether wholly, partly by the recipient, including on account of details of the said supplies being furnished under subsection 1 by this person. So what it has done, this list is common, and then it has added one more condition, such other details as may be prescribed. So now what it is talking about is this auto-generated statement. What is this auto-generated statement? It is GSTR2B, what they are talking about. This auto-generated word is removed. So this statement will consist of details of supply for which ITC is available, details of supply for which ITC either wholly or partly is not available, including the reasons. These are the reasons why it may not be available. Further, this statement will also provide such other details as may be prescribed. So slowly and steadily, government is developing this statement. Now, I'm sure you all know about this statement. When the supplier uploads his supply, that is outward details in his GSTR1, which is the statement for outward supplies, it is reflected in your recipient's inward statement, which is GSTR2A and 2B. Now, they are slowly expanding this GSTR2B, saying that this GSTR2B will have these details. One, it will specify whether ITC is available, not available for all these reasons. Further, it will specify some other details as are prescribed. Is this clear? Then coming to 39.1, which talks about your GSTR 3B return, correct? So it talks about who has to file the returns. What it says, and shall for every calendar month thereof furnish a return electronically of inward and outward supply of goods or service or both. So in 3B, you mention both outward supply details, inward supply details, right? Of goods or service or both, input tax rate availed, tax payable, tax paid, and such other particulars in such form and manner within such time and subject to such conditions and restrictions as may be prescribed. So what it says, 39.1 is dealing with filing of your monthly returns, which is GSTR 3B. It says that this return will contain your inward outward details, ITC availed, tax payable, tax paid, and other details. And what it says, such other particulars in such form and manner within such time and subject to such condition restrictions as may be prescribed. So 39.1 is amended so as to provide for an enabling clause to prescribe conditions and restrictions for filing of the returns. Now, what is going to happen, students? All this is the preparatory part, whereby slowly we are going to reach to a point where your 3B return will become freezed. Freeze means today you can change, you can by hand put figures in 3B. We are slowly, steadily moving to that return scenario where 3B will not be editable. So all these amendments are made to reach to that level. So they are saying and subject to such conditions and restrictions. What would be the restrictions? Maybe 3B could not be edited by you. The quantum of late fees leviable in case of delay in filing return has been given here under only for information of student and is not relevant for exam. So the late fees which is applicable if you file the above returns late is provided. You may not prepare or note this for your exams. It may be noted that the late fee payable by a registered person for delayed filing of return and or annual return under 47 is with reference to only the CGST Act. An equal amount of late fees is payable by such person under the respective SGST Act. Hence, the late fee amount mentioned herein pertains to both CGST as well as the SGST Act. Now, rationalization of late fees. Now, in this late fees, these were the original late fees where you can see 100 per day or 5,000 maximum. This has been reduced to 50 and even 25 per day, where the return is a nil return and the maximum amount being made 1,000. So this is rationalization in the 3B return or one return late filing fees. But they have already mentioned above that you are not required to prepare this for exams because this is not to be asked in the exam. So these are all details relating to filing of return late fees in case you are filing the returns late. Fine. Okay, so students, so these are the amendments that are now applicable to you. Let us now take up your questions. Ashlisha saying, so it is just replacement. So we need to be careful while writing answer. I have made 26 material. Hope this has already taken care of it. Need to check. Please check Ashlisha beta in May 26 material. In fact, what material I am showing you on the screen is the downloaded material from May 26 only. In that, these amendments are given at the end. Only those amendments which I just showed at the start are the additional, because the date when these amendments were printed in this module, those amendments had not come. So only those additional which I took in the first sheet, that is the part which is not present in the May module. Everything else, what I'm showing on the screen right now, all the modules, this is I have downloaded today itself. So they are the one already there on the portal. You can download from the May section, and all these amendments are there. Beta. Correct? Okay. So from my side, I have completed all the statutory updates, including the additional ones. Okay, Swati ma'am is also there. So good evening, ma'am.
Good evening, sir, and good evening, students. Today is the most important class because let me also brief you the applicable position of law for May 2026 examination. See, for May 26 examination, All the amendments made by Finance Act 2025 are applicable for you. And along with that, the cutoff date is relevant for you is 6 months prior to the date of examination. So for May 2026 examination, 31st October 2025 is the cutoff date. All the significant amendments made by notification and circulars which have become effective till 31st October 2025 are applicable for May 26 examination. And as sir has rightly told you that study material for May 2026 is already hosted on the website, and the same is updated till 30th of April 2025. So amendments made thereafter till 31st October, they are compiled in the as statutory updates, and they will be web hosted shortly on the BOS knowledge portal. And since the amendments, as we know that GST is a rule based legislation, so the date when the notification comes and the day when it becomes effective, these two dates might differ. Right. So this is a reason that all the amendments made by Finance Act 2025, they are given at the end of each chapter in the study material. Because the date when the study material was released, all the amendments made by FA 2025, they had not become effective. That is why they are given at the end of the chapters. But now, what the situation is, current situation is that for May 26 examination, all the amendments made by Finance Act 2025, they have become effective till the cutoff date applicable for the examination. What is the cutoff date? I have already apprised you. The cutoff date for May 2026 examination is 31st October May 2025. So all the amendments made by Finance Act 2025, since they have become effective till 31st October 2025, so they are relevant for you. So you have to read all the chapters that has already adequately covered all the amendments made by Finance Act 2025, along with the key amendments which are applicable for you, which have arisen from the notification and circulars, and which have become effective. Not only they are notified, but also they have become effective till 31st October 2025. And the namely, let me if you will ask me to name a few key amendments, like the amendments in the made by recent 56 GST Council meeting amendment in case of exemptions of services. Exemption is life insurance that has become exempted. So this is the major amendment arising out of the 56 GST Council meeting. GST framework, DSC 2.0 amendments, which we all are hearing in lot in the news. So this is a key amendment exemptions, which also all the key amendments which are applicable for May 26 examination, they are already covered by the sir. So now you are updated with the recent latest position of law, which is applicable for you for the forthcoming May 2026 examination. Along with now you are at the preparation stage, so you must be thorough through all the relevant provisions of law along with the statutory updates. But yes, once you will all these provisions are thorough, we will advise you at Board of Studies that the revision test paper for January 2026 has already been web hosted. So you may refer the same for the practice. Plus, as we know, the 30% division allocate 30% of the marks is allocated to the case scenario based MCQs. So you may refer the booklet on the case scenarios as well. Then you may practice from the mock test papers, which already have been started. MTP series has already been started. So you may also refer that if your one round of practice, one round of preparation is over, just to have a brief idea whether you are able to complete the paper in the stipulated time frame or not. And then when the exam will you will be near the examination period, then we refer the Sarash. Now I am at this point of time I am apprising about all the BUS educational resources which are relevant for you, so that nothing gets missed from you at this stage. So study materials, statutory updates, revision test paper, booklet on case scenarios, and this last but not the least, the Saransh. These are the most effective sources, educational sources relevant for all the students. So please, if you anybody of you have not bought it from, not purchased it, you may please purchase it, or you may refer it from. All these are web hosted on the BOS knowledge portal, so you may download it from there and get it printed, whatever way you feel convenient. But please do not miss any of these resources. And if in case of any doubt, you can always reach out to us at the Board of Studies. You may call us, you may raise your query. And as one thing which has must have already been surprised to you, that all the substantive provisions of GST law, they are the backbone of GST. All the fundamental aspects of GST law, they are the backbone of GST. They carry the highest weightage in the examination. Once again, I am emphasizing you. So fundamental aspects, when I say, it means concepts starting with supply, charge of supply, place of supply, exemptions from GST, time, value, and input tax credit. All these are the key provisions of GST law. So make sure that you have a strong command over these substantive aspects. Because once your substantive aspects of GST law fundamentals are strong, then you will be able to undoubtedly score good in the examination. Do not fear from the GSC. GSC is very well scoring in the examination. You will be able to score well even if you are doing self study. Nothing to fear. So, substantive provisions of GST law carry the highest weightage, followed by the procedural aspects of GST. Whenever you are studying GST, yes, we always recommend students to study in the sequential manner, so that only then you will be able to understand the things and appreciate the logic behind introduction of a provision. When you are studying a law paper, taxation paper, then you will be able to understand and retain it if you understand the logic, if you understand the need, if you understand the reason behind introduction of a particular provision. So that is why studying in a sequential manner is recommended. So whenever now, if one, I hope that most of you would have studied now, completed one round of studies. So anybody who has left out, or whenever you are going to revise it, then also follow these aspects, follow in the sequential manner, pay more weightage to the substantive provisions of GST law, and read all the questions with the statutory updates, amendments made by FA 25, which sir has gone through. So, wishing you all the best. Today is the last day of your classes. Wishing you all the best. Thank you, sir, and thank you, students.
Thank you, ma'am. So
Okay,
students,
thank you.
kindly make a note of everything that ma'am has said. And yes, we are always there to guide you, help you. So whenever you have any challenge, we are always available
Thank
for
you,
your support
Ashwisha.
ideas.
Yeah, thank you. Thank you, everyone.
Okay. Good night.
Good night.
Bye bye.